This video is going to be the answers to the 2014 mid-year exam question 3. You'll notice here I've got the trial balance as per the question. Over here on this item I've got all the adjustments over here. I'm going to do step-by-step rendition of all the entries into down here, and then I'm going to produce and end up coming up with this statement and this balance sheet. Okay. Do first of all is to do the general journal entries. You don't have to do them, but there's an important part of the process that's essential to get this question right. So what I'm going to do, I'm going to take all these adjustments and put them down there as narrations first of all, and then I'll show you step by step how to go about doing that. Okay, you'll see here I've just put all the adjustments in as narrations, and I'm going to do them one by one. Let's start with the first one. Commission owing $3,500. Now that's an accrued revenue, so I'm going to type accrued revenue. Which is $3,500, and the corresponding account is commission revenue for $3,500. That's my first entry done. What I'll do, I'm going to do all the entries first, and then I'm going to show you the next process of putting them into the trial balance. Insurance was prepaid on the 1st of August 2013. That's an annual premium. That means for the whole year we have paid for 11 months, and there's 1 month that's prepaid. So in order to find out the insurance premium, we must go to the trial balance and find it on the trial balance. There it is. It's $18,000 for the whole year. So $18,000 divided by 12 is $1,500. So I'm going to put those amounts in straight away. So I've got them. So just to reiterate, that's 18,000 is equal to 18,000 divided by 12. That's 12 months. There's only 1 month that we have to calculate for the $1,500. It's a prepaid expense. And it's insurance expense that we have to decrease because that's the amount of prepayment for the year. That's the second one done. So debit prepaid expense, credit the insurance expense. Next one, we've got manager's salary owing. So that's $5,500 worth. So it's giving us an amount straight away. So straight away, what I can do is to put that amount into the debit and credit column. It's to do with manager's salary. That's my expense. And the corresponding entry is accrued expense. There you go. So we've got a debit there, recognising the extra amount that's owing, and we've got this current liability accrued expenses here, $5,500. Depreciation to be calculated on furniture and fittings. I'm going to put the entry in straight away. For every depreciation entry, we must put depreciation debit and its accumulated depreciation as a credit, and I have to work out what that amount is first. So the furniture and fittings, I need to go and refer to my trial balance, and furniture and fittings here, if I can find it, there it is there, furniture and fittings is $65,000. So what I must do is to adjust that. Let's go and do that. So the calculation I've got to make is $65,000 multiplied by the 15%. There we go, 9,750. So that is the amount that we need to charge per year. The bad and doubtful debts one is a bit more difficult. What we must calculate is the provision as it should be currently 1% of the accounts receivable. So I'm going to type that in here, is equal to the amount that it relates to is the accounts receivable control here, 55,000. Alright, and we're going to multiply that by 0.01, the final balance here, the provision for doubtful debts, must end up as. We've currently got 900 in there. We must decrease this account by $350 to get that to 550. Okay, so that's 900 less 550, what this should end up as, and that's 350. So the amount that I have to do is to debit the provision for doubtful debts for $350, and I'm going to have to credit bad debts. There we are. So what that will do, that will decrease the provision for doubtful debts account from 900 down to 550, and that's what we calculated down here. The next one, the stock take reveals inventories worth that 96,040. If we look at our trial balance, the inventories control figure, if I can find it, there is 96,440. So that means that 400 has gone missing. So we must obviously decrease the inventory control by 400. That implies that we must make a credit to this account. So let's go and do that. So the credit entry I'm going to put in first, inventory control, that's my $400. The other corresponding debit entry is the thing called inventory adjustment account. There we are. That's the stock take done. The clearing entries, I'm not going to do the general journal entries here, but what I'm going to do is to show you the shortcut that I would do in a trial balance. So let me just do that, and then I'm going to show you the remaining adjustments I have to make to the trial balance before I start on my income statement. So here you see GST credits received of 86,970, and my GST collected is that. So simply what I would do in this instance is change that to clearing, right, and adjust this figure up here by the difference between the two. So I've got the two figures up here. I'm just going to take one away from the other. So equal to that one minus E11. There we are. So that's the amount that must go on there. So I'm just going to type that in there. So that's the amount for my GST clearing, and what that means that this count here I've just wiped out. Okay, I've cleared it off. So I'm just going to clear that for now. So I've done that entry. Okay, the next important step is to make sure that all these other entries are adjusted in my trial balance. So accrued revenue, 3,500 debit. Let's go over here. I haven't got an account there yet, so I'm going to type in accrued revenue, because that doesn't appear. It's one of these accounts that only appear for 1 day. So I've got adjusted that one. So I've ticked that. So I'm going to put a star next to it to say I've ticked it. Commission revenue credit for $3,500. So the trial balance over here, commission revenue, where is it? Here it is up here, $8,000. That must be increased by another $3,500, so that ends up being $11,500. So I've ticked that one. The next one is prepaid expense. That's an item that doesn't yet exist in the trial balance, so I'm going to add it here on the bottom. There we have it. That's going to be worth $1,500. I go back to my general journal. I've ticked that one off nicely. And insurance, I've got to credit this amount. Alright, and watch what I'm going to do here. It's got a debit balance of 18,000, and I'm going to, because it's a credit balance and I have to debit it by, credit it by 1,500, that means I have to decrease that. So if it's a credit to a debit or debit to credit, you decrease. If it's the same, you increase like I did before with the commission revenue. So I've adjusted my insurance expense, so I'm going to put a tick next to that. My manager's salary I have to increase by $5,500, so let's go and do that. Manager's salary, if I can find that just quickly. There it is there. I've got to add another $5,500 to that. Remember, that's a debit entry to debit balance, so therefore I have to add them together, so it's $90,500. So I've put that in. I want to continue to be very methodic the way I approach this. There's another account that hasn't been yet generated accrued expense, which has got to go in the bottom down here, accrued expense. Okay, it's $5,500. So that's been added. I've got that bit done. I've got to do depreciation and accumulated depreciation. I don't think depreciation's there yet, so I'm going to type that down there for 9750. I did notice before we did have an accumulated depreciation for furniture and fittings. That's the account that I've got a credit. Remember the credit and credit makes them add them up together. So I've got that added on, so it's 35,000 plus the 9750. So I'll put those in. I'm just going to tick them off, and that's a really important part of my process. The provision for doubtful debts is my next one. I've got to debit this account. Remember before we wanted the total amount to be 550. Let's go and see how that works in a trial balance. Here we had an item for 950. I'm going to take away 350 to get up to 550. So it's a credit balance. I've debited. Therefore, the net balance is that. And I'm going to go and credit. I've now done the debit here. I'm going to tick that off. But I'm going to credit bad debts. Right? And I look for bad debts and find that's $1,600. It's a debit. Remember that if I credit this amount, I then have to decrease it. Credit to a debit means a decrease. So I've done that. And I've got one more entry to go here, my inventory adjustment, inventory control. That's my stock adjustment account. My inventory adjustment account, I haven't yet got it in my trial balance, so I'm going to put that there of $300. Oh, it's $400, I beg your pardon. I better go and adjust that to do that properly. And my inventory control account, I've got to credit that. Okay. Make sure I've got the right amount there. My inventory control account has got to go back down to the amount that we had initially in our stock take that we did. Just checking. So your stock take revealed 96,040, and we've obviously reduced that to what we've actually got in stock. So obviously we've lost some. So what I've done, I've gone through and adjusted my trial balance, and now I'm actually ready to start putting all this information into the income statement and balance sheet. What I'm going to do first of all is to wipe the income statement and balance sheet and show you as I build it up. Okay, just give me a second. Okay, I've done all that. Now what I'm going to do, I'm going to post all these entries to the income statement. There it is. And you've noticed that I've left all the items still in there. I'm just going to type in the amounts, okay, to make it a little bit easier for me. And I've got the balance sheet. I've left the formulas in, of course. So let's make a start. And another thing I would strongly advise is just go from top to bottom and make sure that all the items from the trial balance have been entered into either the income statement or balance sheet, and then do your calculations. Right? Don't get your calculator out until you finish. Let's start. Sales, 707,950. Okay, so that's what I put in here. 707,950. And I go back to my trial balance. I've got that one. Sales returns of 750. 1750. So you can see that's already starting to work for me. I'm going to go backwards and forwards like a yo-yo here. Right, so I've got that one sorted. Put that one sorted. And the way that I'm going to do it may not make that much sense, but what I'm doing is being very methodic in terms of the way that I put these items into the income statement or balance sheet, and that way you won't miss any. Right? So the next one is commission revenue. Now where does commission revenue go? Well, it goes income statement. There it is. There's another other operating revenue. So let me just put that one in. I go back to my trial balance. I've done that one now. Accounts receivable control. That's a current asset. That belongs in the balance sheet. Up here. 55,000. So I've done that one now. Provision for doubtful debts is my next one. So I'll go back. That relates to the accounts receivable control. It goes in my balance sheet. There it is there. You can see how that's adjusted nicely. So we expect to only collect 54,450. So that one's been done. The next one's the cost of goods sold. That's probably the one that you're waiting on before. So it's 254,890. Let's put that one in. 254,890. And something hasn't happened properly here. I'll go and fix that just quickly. Okay, that's looking a bit better. I put a item in the wrong cell. Anyway, there we have it. Let's just have a look at this. Sales minus the sales returns giving us that. Less COGS. We haven't got the inventory adjustment yet, and that'll give us the gross profit in a moment. Let's just keep working methodically through the trial balance. So I've now got this one. GST clearing, that's a current liability. I'm going to chuck that into my current liability section here. There it is there. 11750. Let's go back. Got that one done. And so on. Advertising, that's a selling distribution expense there, 45,000. Done that one now. That one's been ticked off. Bad and doubtful debts is a finance expense. Let's go and do that one in the income statement. Down here, bad and doubtful debts is 1250. So I've got that one done. Lost to burglary, that's a general and admin expense of $45,000. So that's another expense. There it is, lost due to burglary, 45. So I'm going to put that in. It's very laborious progress, but that's what you've got to do. Insurance, general and admin expense. Let's go and do that one. There it is there, 16,500. So I've got that one sorted. The next one's interest expense. That's a financial expense. It's to do with financing the business. Let's go and stick that one into here. There you are. Got that one done. The next one's a manager's salary, another general and admin expense. Let's put that one in, manager's salary. We've got that. Next one is electricity. It's another general and admin expense, 18.5. Go back to trial balance. That's been done. Rent expense, again. I put the wrong amount in, I think. Let's just check that. I did. Just will I check that? There we are. What's the next amount? Got repairs and maintenance. It's getting a bit monotonous, I know. But that's the way you got to do it. Repairs, it's 15,000. Goes in there. Got that one done now. Sales staff salaries. That's to do with selling distribution. Therefore, that goes in the top part of our expense classification. There it is there. 55,000. So I'll balance. Done that one. And telephone expenses, another general and admin expense for 4,580. Where was it? 4,580. Okay, there we are. I haven't put the depreciation amount in yet, but that's going to come as I go further on down the trial balance. But I've got more or less half of them done now. Let's keep moving. So bank. Now here is a trap. Bank is on the credit side, so therefore that implies that we have got a bank overdraft where our check account's gone to the negative. So 70,560 must go in the current liability section over here. Right, and that's really crucial. A lot of people may wish to put it up as a current asset, but it's actually in a negative, therefore it doesn't belong there. Right, so that's a bit of a trap that was set. The next item, vehicles, 50,000. That's a non-current assets. There it is up here. Vehicle, 50,000. There's some accumulated depreciation associated with it. I don't know if it's here straight away. Yes, there it is, 26,000. So let's put that one in the corresponding section here. Less accumulated depreciation. So the amount that we think it's worth is 24. Fixtures, furniture and fittings we had before too. That was the next item, I think. Yes, that's right. That is 65,000. Whoops. We've ticked that one off. We ticked that one off. The next item is $65,000 for the furniture. So let's put that in. The next item is the new amount for accumulated depreciation of 44,950. So let's go and put that one in. 44,950. Okay. So we've got that sorted. Moving along to inventory control, that's a current asset. So let's go and put that in the balance sheet as a current asset of 96,040. We've got that now. Land, 500,000, that's a non-current asset. Let's put that in. Land here, 500,000. Land 500,000, we've got that one in there. Almost there. Accounts payable is a current liability. Should be in the current liability section here. Where is it? Accounts payable, 45,000. Let's just check whether I've got that one right. Do I got that one right? Yes, it's 45,000. I've got that one. The next item is a fixed interest loan. Now this is interesting. You've got to be careful. This is due in the next accounting period, which ends by the 30th of June 2015, right, within the next accounting period. Therefore, that loan is a current liability and not a long-term one. Right. So that was another little trap that was set for us not to fall into. So that goes here, $50,000. Got that one in there. We're now getting to near the end. Mortgage, that's a long-term loan on a piece of real estate, 250,000. That's in your balance sheet as a non-current liability. There we are. So we've got that one now. The capital of 236,730, that obviously goes in the balance sheet down here. Now I've put it in the wrong space before, so capital 236,730. We've got to put the drawing amount in there. Let's go and do that one. Tick that one off. And drawings are worth $65,000. Let's go and put that one in. So we're almost there. So the other accounts that I now must include all these ones that we had at the end. So accrued revenue is a current liability, a current asset, I beg your pardon, of $3,500. Let's go to the current asset section. There it is up here, $3,500. Let's put that one in. So I've ticked that one off. I've got a prepaid expense of $1,500. That's a current asset up here. So I'll put that one in. That one's been ticked off. But accrued expense, it's a current liability of $5,500. Let's put that one in there. There you are. Where depreciation on the fixtures and fittings, 9,750, that's got to go on the income statement. Don't get it confused with the accumulated depreciation, which we already dealt with in the balance sheet. So the depreciation here, 9,750. So that adjusts that. So I've done that one. And lastly, inventory adjustment. That goes to our income statement, the cost of goods sold. Let's just put that one in. That goes in here for $400. Okay, let's just check the trial balance. So what I've done, I've posted all the items from the trial balance. I've made sure that I've not missed any, and put them in the income statement. They're all the individual items there, and the balance sheet. Now the difference that will be from you doing it like I have, as opposed to um, the final product, is that all the calculations are already done for me. Alright, so now you get your calculator out and do all your calculations. I'm just going to check it because I've noticed an error to make sure where my error is. And how I can see that, just out of interest, is that my two bits here obviously not right. So I've put in an item in the wrong box, or I've missed off a 0 or something. So I'm just going to check. So that's my thing. But what you would do now is to get your calculator out and start the income statement and start calculating all the way down. Okay, back again. I found a couple of mistakes. One of them was that I didn't put the right GST clearing payable in there. You might have noticed that from before. I hope you did. I've just put the right amount in there, so obviously it it balances. And they're the sorts of mistakes that you might do as well. But having said that, it's important that you follow that process like I have. So you're going from the trial balance to the income statement and get your your get your calculator out and do your calculations afterwards, and then see, hopefully you get to the end and you get this to agree. Hopefully that's been useful to you. Um, anyway, we'll see how you go with it, and good luck with it.